Hey everyone, welcome to a special edition of our VIP post-market wrap. This is usually a private event that we're not going to later on put on YouTube, but in this case, we're recording this and we'll put it on YouTube. So, every day we have our pre-market prep at 9 a.m., basically looking for trade opportunities and trying our best to predict what way the market will go, what way some certain stocks will go. We do that every morning at 9 a.m. We get that from a list of 300 stocks. We monitor for news, and then we come back here at 4 p.m. and take a look at how we did. And honestly, we've been killing it. It's about 3 weeks in a row that we've been doing a really good job, both on the macro and also finding individual stocks, which are set up really nice for the day. And you can see here our analysis of the continued bear market rally is still working out. We're using our cheat code, the TLT. Oh, by the way, sorry, forgot to tell you, we are going to have a special guest soon. Let me just throw that on here. So we'll do our usual review, and then we're going to get to our special guest, Mark Gomes. Let me just make sure he has that link. All right, so he'll join us soon. So in any case, we've been using our TLT cheat code to check the health of the markets. That's been a really, really effective cheat code as TLT goes up, and if it stays elevated, if you see any diverging performance in TLT, either to the upside or the downside, that kind of tells you where risk assets are going. When TLT goes up, interest rates go down. That's good for risk assets. And again, we're over the 20 DMA the first time since June 29th, which got us that huge bear market rally the first time. So we're expecting a continuation of this bear market rally, especially since there's no other events coming up, nothing on the economic calendar, no major prize like we had one today for about half an hour. We'll talk about that real quick. So, but you can see the SPY 200 DMA has a little bit more room to 407. But I'm really looking towards the NASDAQ here, maybe a big move to 310. So what can throw that off? Really, we went through CPI, PPI this morning, right? That was safe, and I never had a concern about that. Usually it's in line with CPI, no surprises. In this case, it was even better, which sparked the rally this morning. So all engines go this morning, and we had Walmart, as we said, with a big beat this morning. HD turned it around, even though it looks like they're calling for some softness going into next quarter. Let's get now into, before we get into the individual stocks, I just want to tell you how we looked at the incident today with Russia and Ukraine. I was totally eyes on TLT, right? When we put our eyes on TLT, we saw that, hey, economic situation is still good. And this definitely was a geopolitical thing. Like we saw all the Twitter feeds coming in, everything correlating with that market dip. And we said, hey, this is purely geopolitical, not an economical issue. So now you have to look at the extent of this missile thing. How big of an event is that? Something that caused concern or not? So in our judgment, in our community, so we didn't think it was much of anything to worry about. And so far, that turned out to be true. So that's a macro analysis. And going into the individual stocks, I told you, DWAC, you want to be done with DWAC by the end of the day today. Sell the news we thought would come a day early or tomorrow morning, the latest, with Trump announcing tonight. DRIO, we went into this extensively this morning with a special Zoom. They had awesome earnings. We put out a trade idea of a $570 swing target. That's the high on October 9th. And we think that's going to coincide with the 200-day moving average, which is declining. Really, really good news. Not going to go into the details on the DRIO right now. There is a recording of that in our community you can take a look at. And hopefully we'll bring the CEO for a Zoom very soon to our community as well. Rum, man, did we ever call this? We've been playing Rum perfectly. Oh, man, the understanding of psychology around the Rum investor is really valuable. And selling this into today, the drop over here at $10 was bought up, and I think you're going to continue to see that. The thesis here, not going to delve into it, except, man, those selling puts on Rum, very, very incredibly profitable. We're looking at some of those yields today, and they're getting even juicier after the earnings report. Those yields on those sold puts, very nice. We're waiting for quick earnings. QUIK should be coming out here. We'll get to that maybe if we have time. It did come out right now, so we're not going to have time to look at it here while we're speaking, but maybe we'll get to quick later. AEHR, I just want to point out, AEHR hit an all-time high this morning and then started reversing, almost went negative. And I just put out a caution. Take a look at that. When you have like a new big high and then you go negative the same day, that's often a sign of a reversal. We didn't get it. I'm still holding this from $7. Story hasn't changed for me. All right, then this morning we covered TSM, Shoals, Enphase, Meta, all of these stocks are stocks you can day trade. The day traders love trading, high liquidity. We've been telling you about the charts, especially on Meta, riding this from $95 to $112 and now $122. The next target could even go to $127 at the 50 DMA. So still holding Meta, still recommending to hold that. Not a certified financial advisor, but I'm recommending that for the fund I've been now consulting with. We got Clearfield earnings Thursday. Don't forget about that. That's a trade of the week pick for us in Wolf Financial Spaces. XXII, a good day. Another trade of the week pick for us. They met with at Roth conference today with analysts, with Craig Hallam, analysts on Thursday. And that sped our way all through that. So now we can bring on a special guest, Money Mark Gomes. How you doing? Let's make sure your audio is working.
Yeah, we're good.
Good. Money Mark. All right. I'm going to remove this screen in just a second, but just to show you here, we got 4 tickers: VTSI, TPCS, CTLP, SMSI, all of which are stocks that have been presented in our community by different people. I think you did CTLP, SMSI, you're expert on it, but we had different people present on SMSI. TPCS, we've had Ashley present on it, but you're the big expert on that. And VTSI, I think I've done some presentations on that. So lots of interesting stocks here. And you told me, hey, Ben, there's big news on all 4 of these. So I wanted to give you the opportunity to go through these. Which one do you want to tackle first?
You tell me. I mean, we can go in order: VTSI, TPCS, CTLP, and
a little bit with VTSI because I do know a little bit about that. I was monitoring that closely. It seems yesterday you see this big drop in the middle of the day there yesterday because earnings came out early. It was a top line and bottom line miss. But then it looks like you kind of liked what was beyond that, and you see the stock rebounded here towards the end of the day.
Right. There was massive bookings. So on the conference call, they made it pretty clear that the miss was due to being able to recognize revenue from deliveries at the end of the quarter, that they would be working on that in Q4. So, to me, this is like it's a timing difference, right? A couple of deliveries slip weeks into the next quarter and you miss the quarter and then you beat the quarter after that. The big thing for VTSI is how much business did they book in the quarter. So here's a company that was supposed to do 6.5. They did 4.9, but they did 16.7 in bookings. So they did 10 million more in bookings than the estimates were for revenue in the quarter. So this is all going to come back to them, in quarters ahead.
Okay, great. Awesome. Nice, a good summary. We get the story there. The backlog is growing. And we actually have the CEO of VTSI. I was trying to they have like co-CEOs, which is weird, but we got the Bob Ferris, the founder and CEO. He's joining us Thursday night at 9 p.m. I think John Givens is a co-CEO. He's on the email thread. I'm trying to push him to call in. Maybe he'll join us also 9 p.m. And I think hopefully Money Mark, you'll be able to join us then. That's going to be on a Zoom for our VIP members. And, we'll get that recording out about a week later. But if you're not a member of the VIP community, by the way, actually, let me move this special guest is already here. If you're not a member of the VIP community, you can listen to that for free Thursday night just by signing up for a free trial. So VTSI, good information there. Do you have any thoughts on technicals or fair value or where you think the stock goes from here?
Yeah, I mean, I'm not a trader. I'm an investor, so professional analyst of valuation. In my estimation, this stock is easily worth double what it's going for right now. And in this environment, this is the environment where you know how to do the math. You can take advantage of these situations, and then you can do the technicals and stuff on your own. But to me, this is one that you buy, and it can take off to 8 tomorrow, or it could take a little bit of time to get there. But this thing, is way too cheap at these levels.
Okay, great. Thank you. Let's move on to the next one. Let's do SMSI next. SMSI has been interesting. I do own a position in this one, and I've been watching from the periphery. It was interesting seeing the stock go below 2, and I saw the next day an analyst downgraded their price target to 2 just for the stock to promptly go right back above 2. So that was very interesting. And I'm looking at the technicals here. It looks nice with the now move and a close over the 50 DMA at 237. So I like the setup here technically. And apparently some news came out we're all waiting for regarding T-Mobile. What can you tell us about that?
Right. T-Mobile Tuesdays, that goes out to the majority of their customer base. This is the official launch of the product into the T-Mobile customer base. They launched the product several months ago, but that's a launch. That's not necessarily a sign that they were going to start marketing it, selling it whatsoever. That happened today. It was official. From what I hear from my sources, that this is one of many campaigns that are going to take place, and T-Mobile will be adjusting on the fly to optimize revenues for this product, which officially makes them the first ones doing so, with Verizon and AT&T close on their heels, getting ready to launch themselves early next year.
That's very exciting to hear. I know I had a great experience with SMSI. The first time it ran up after they got Sprint, after really when Sprint started marketing was the key. And then we were able to track those channel checks. We had channel checks in the store, ended up making some really good money on that run. So I actually added more to my position for the first time today after that news came out. So that's an interesting nugget to add on to the technicals, which look good here. And kind of remind us what you think fair value on SMSI is, fundamental fair value.
Well, you see the 52-week high there sitting above 6. I think that would be a good starting point because, if you think about Sprint, that enabled the stock to go from 1 to 7. They now have T-Mobile, which is 2.5 times bigger than Sprint, and also have Verizon and AT&T coming, which combined have times more market share than Sprint did. So, it's kind of easy math. I'm not going to take you through an operating model on this show, but, we can easily see EPS over the next few years climbing to $1 per share of recurring cloud revenue based on these deployments starting up.
Well, $1 a share would be huge no matter what kind of multiple you put on it.
Right. Right. And, the interesting thing that most people don't realize is that the downside risk is minimized by the fact that the product's developed. They're already shedding developers. They're closing development offices overseas. They've put $200 million of R&D and M&A into this product, and the market cap is now $100 million. But they have over $40 million in revenue that they don't need any expenses to support virtually. They could cut their expenses about 90% and support the revenues they have now. If they wanted to, they could say, you know what, let's finish off Verizon and AT&T and just live off of the fat of these guys selling their stuff, and they could cut expenses, probably down, I would say, 1 or 2 million per quarter. Now, imagine if they get 7 times more revenue than Sprint did, which was 7 million per quarter. You're talking about a $200 million revenue company with 90% gross margins and almost no expenses.
Yeah, very, very interesting. Could be very compelling. I've been a little hesitant this past year because of my recession worries and what's going to happen with consumer discretionary spend. So, we'll have to. I know there were other issues earlier this year with, will they need to raise money and all that kind of stuff. But if they can get past those issues, if we can see some data that, hey, people are signing up even though there's inflation, then yeah, this could be a multi-bagger. That makes sense.
Yeah, and then obviously with market sentiment the way it is, obviously stocks have gone down regardless of what the underlying value is. A lot of people don't know how to do the math on underlying value. And what's great about a company like this is we're at the point where if they just shut down expenses and just live off of the rev right now, that 11 million per quarter, I calculate that they could do over 50 cents of EPS right now without these carriers ramping up.
All right, awesome. Thanks for that great update. Let's move on to TPCS. Now, this one's been a frustrating one for me because I guess bottom line is it's not liquid enough. And every time I try to go in and, because I like to trade swing periods more than anything else. I like to hold stocks for weeks to quarters rather than just hold it for years. So I'm looking for inflection points. So every time I think, here's a TPCS inflection point, I'll jump in. I got to buy at the ask because unlike you, I don't have patience. I'm like, let me buy at the ask. And then you know what it is. It's just low liquidity. And then interest dies down. And then I end up selling it lower. I get screwed in TPCS every single time. Maybe I just don't have the right personality for this kind of stock. But so what's going on? Is this another false alarm where people get excited? There's 1 day of liquidity. They get in and they're going to get trapped again. What's different this time, Mark?
They hit profitability. It's as simple as that. So they put out an SEC filing, not a press release, an SEC filing saying they're going to need a little extra time to put out their 10Q because of an acquisition that they made. But at the same time, they announced a huge. They didn't even put it in the numbers, but the numbers that they gave made it very clear that their have gone through the roof. They did that last quarter, and this company just needs to play. So in terms of liquidity, if you want to play it for a swing, I wouldn't do that because of the liquidity of the stock. However, if you're willing to wait about 3 months, they put a measure in place, went through the board of directors to reverse split the stock, just not so that they could raise money, but so that they can uplist. So once they uplist, liquidity goes through the roof, buyers come in. That's obviously a catalyst just in and of itself. But there are a lot of folks that I know amongst institutional portfolio managers that want to buy this stock and can't for the same reason that you've had trouble, which is liquidity. If we put that aside and just look at the fundamentals, they have business with the government over the next few years that should ramp up to about $100 million in revenue for these guys. And they're delivering already gross margins heading towards 30%. So they get up to 30% gross margins on 100 million of government business. You don't really have much in the way of SG&A expenses behind that. So here's a stock that can deliver upwards of 70 cents of EPS in the next few years. And you see what the stock price is right now. So you get an uplisting, a move to the Russell Microcap Index, and visibility into 70 cents of EPS. You tell me where the stock's going to be. This is not a swing.
I hear you. The math makes sense if it happens. I don't have as much knowledge about this company to know for sure if they're going to execute that way, but it looks like there's some data coming out that's supporting your thesis. So that's great.
There's no execution involved. The government's got these plans in place. They've already placed their dynamics, and there's usually only one or two suppliers of each part into the programs. And so TPCS has a locked in, guaranteed virtual monopoly on the parts that they provide to their contractors for the U.S. government for the next 10 years. And it was just about waiting for them to get profitability and whether they could do that without needing to raise more money. And now we see where they've gotten there. So it raises, obviously, unprofitability is out of the way, dilution is out of the way, and now we have an uplisting potential.
Well, what about sustaining that profitability? That's a concern with people have with a lot of microcaps in terms of operations and supply chain and unexpected expenses, which, there's a lot of, with small companies, you see a lot of this, what's the word I'm looking for? It's not like smooth, like sequential. You get the rocky, what's it called? When you get like different quarters up and down. You get that kind of
rockiness. Sure.
Variability, right?
And we can expect variability.
You get lumpy. That's the word I'm going. You get like this lumpiness out of nowhere. So do you have how do we know when they've inflected to not only profitability, but sustained profitability where we might see that sequentially over several quarters?
Well, over the last 4 quarters, they've delivered minimum 77% revenue growth each quarter. And their backlog is moving at an even faster rate. So, from what I understand, the company they acquired, which was, on the brink of bankruptcy, they made a complete turnaround of that business. The CEO is a turnaround expert. And now these programs are rolling with the U.S. government. So it's not a matter of, they don't have to go out and get new business every quarter. It's just a matter of when they need to deliver product on a quarterly basis. So yes, there will be lumpiness from a delivery standpoint, but no, there will be no lumpiness in terms of these are locked in programs. Nobody else can make these parts. They're custom made parts, and it costs millions of dollars to develop them in the first place. So all these guys have to do is not screw up, and they've never screwed up. And this business is just locked in for the future. The number one concern with this stock has been, again, possibility of dilution and the illiquidity of the stock. And now we don't have the threat of dilution. We've got profitability, and now we got an uplisting coming to solve the liquidity issue.
Okay, perfect. And we'll close it out with a couple comments on technicals. You see here today, it gapped above the 200 DMA. Perhaps that's your new support level there at 156. You go to the weekly chart, it closed above the 50-week moving average, which is interesting because that 50-week moving average has been resistance here in the past. Could this be like a sky blue breakout above the 50-week MA with a relatively low RSI still on the weekly chart of 59? So interesting potential setup. And if you go to a 5-year chart, this has actually been a great performer over the last 5
Right.
years, from like 50 cents here to $1.70. Interesting, even though through all those frustrations, I think that illiquidity gets to some people, but it has been a good performer overall after the last 5 years. So,
Yeah,
um,
the last thing I'll tell you is that that last downtrend that you saw was primarily from the research we've done based on the company they acquired, Stadco. They wanted all cash. TPCS gave them shares of stock as part of the deal. They didn't want the shares of stock. They were selling the stock. And I myself was the major buyer
oh yeah,
in the final tranche. They
is that right
sold
here?
out
This
the rest
big
of their
green
shares.
candle
I think
here on September 30th.
it was around. It was more recent than that. I think it was about
Okay,
$1.44 a share a few weeks ago. There
okay,
was probably a spike in volume. That was me and a few other folks
cool,
taking out the remaining shares. And so there is the large seller is gone. The large seller from months
cool.
and months and months is gone. In addition to all this news.
Awesome. Good information. That does explain the chart if that's what happened there. The bottom right out at 140, 144, and off to the races with this new information. Perfect. We
It,
love making sense out of markets, Mark. You're helping us making sense out of markets here at Story Trading. We love it when markets make sense. So CTLP, we have Cantaloupe. This was a recent VIP pick. You've introduced to us. I remember the story with the vending machines. Fascinating story. I've always questioned the valuation, though. It doesn't seem as cheap as some of these other picks in terms of, hey, is this multi-bagger potential? But you know what? I'm here to give you a hard time sometimes. So let us know if the story's gotten even better yet on CTLP.
yeah. So yesterday news came out that Subway, the sub chain, is going to be rolling out and actually has started rolling out vending machines that you'll be able to use AI and natural language to say, hey, I would like a meatball sub with provolone, for
Hmm.
example, and the machine will spit it out for you. Okay, so it's a just an advancement on vending machines. This number one validates what I've been saying about
It'll
CTLP.
spit out. It'll spit out a fresh sandwich for you.
And it's not going to be a fresh sandwich, but it'll be
Mm,
fresh enough because those basically the local Subway stores, there are 20,000 of those, right, are going to be proximate to these vending machines that will be spread out all around, those areas, and those stores are going to be the ones producing the sandwiches that go into those machines on a daily basis. So they will be relatively fresh sandwiches. And the more important thing about all this is that it shows that in this environment where you have a tight labor market, labor inflation, and lots of innovation happening with regard to IoT, being able to connect machines to the internet, we now have a triple barreled shotgun that changes the dynamics of the vending machine industry. And this is going to be a sea change. The vending machine industry has been very boring before. Now it's going to take off. And what I learned today, and it hasn't been announced, I'm the one that broke this news to the community. Subway is using CTLP for their payment mechanism on those machines. So what you can expect to see going forward, and part of the reason for that is that CTLP, unlike its competitors, has advanced software to have dynamic pricing. They can change the pricing from remote locations. They can keep track of what's selling, what's not selling, and optimize the profitability of those machines. So they actually have companies out there, customers out there that they're in the business of acquiring existing vending machines from folks at, let's say, 3 or 4 times EBITDA. And when they put CTLP software in place, it increases the revenue of the boxes by 30% and decreases the expenses by that same 30%, making them significantly more profitable.
Where do we get this info on the Subway rollout? Is that a press release somewhere?
Oh, well, yeah, the Subway rollout was a press release. And once I was informed about that, That was yesterday. It came out, and it was all the major outlets, CNN, yes, everybody was
Oh,
covering
okay,
that
but
news.
they don't. Oh, it was a Subway press release, but not on the Cantaloupe feed. Okay.
Right. No, that's what I said. Nobody knew. Nobody still knows except for my community and now your community. Right.
Yeah.
I discovered just about an hour or two ago that CTLP is powering those Subway machines.
So do we know anything about the rollout? Are they like piloting it in a small area first, or is it a national rollout?
It's supposed to be a national rollout. They've already got 400 machines out there in the field, and beyond that, I don't know exactly anything beyond what the media
Cool.
has provided on that.
So do you
The
have
more
any
important
estimates
thing.
on financially how impactful should this one deal be? We have a 234 million market cap already. So is this a sentiment thing, or is this going to have a real financial impact on the company?
Yeah, I see very little financial impact of this particular deal on the company right now, but it's a validation of what they're doing and the fact
Got it.
that we are going to see more companies like CVS. Even you're going to see vending machines
Ooh.
more and more places, and these guys have established themselves as a leader. Now, from a valuation perspective, which you brought up astutely, they've been in R&D mode to put themselves ahead of the competition. They've now accomplished that goal and replaced a turnaround artist CEO. He retired. It was a planned retirement because they wanted to get through the turnaround of the business. And now they've put the business in the hands of the CTO, who is in charge of the innovation. And he says they're ready to roll now with their innovations. So if you look at Wall Street estimates, they're expected now to add 20 million of EBITDA this next year. I believe they're going to go to 40 million the year after that, and maybe 60 million the year after that.
Okay.
Mark
Cool.
screen now, just enterprise value of 200 million. So you got a company with $200 million enterprise value that could produce 60 million of EBITDA in a few years.
Got it. All right, I get it. It's a solid company. Maybe the risk is lower here than some other opportunities, but I think the reward may be a little bit lower as well. So great story, Mark. Thank you so much for your time. Where can people follow you if they don't already? You got a website or something?
We have markgomesstocks.wordpress.com. 2 S's in the middle. markgomesstock.wordpress.com.
Awesome. Thank you so much, Mark. And we'll see you hopefully Thursday night when we interview the CEO of VTSI. Appreciate your time.
Sounds good. Thanks.
Yep. Thank you. All right, folks, there you heard it. Some great updates on CTLP, SMSI, TPCS. Good updates, actually. I didn't expect that. Turned out a little bit better than I thought, some of these updates. So definitely has piqued my interest here in some of these names. So we'll be following these stocks in the community. All 4 of these already on our watch list. So yeah, that's a wrap, guys. We're doing great here. We got the quick earnings release. So we're going to hang up on this call here and we'll evaluate quick and talk about it in the chat rooms. And we'll be back at 9 a.m. Eastern. Again, if you're watching this and you're not a VIP, you can sign up for a 7-day free trial at StoryTrading.com and get access to all of our shows. So we will see you soon. Thanks for joining, and thank you for your support.